Hey everyone, have you wondered why, despite working hard, many of us still find ourselves struggling with money? Imagine earning a good salary, but still feeling like you're living paycheck to paycheck. Or maybe you've tried to save for a rainy day, but always seem to fall short. You're not alone. Recent studies reveal a shocking number of Americans, even those making six-figure incomes, are facing financial challenges that could put their future at risk. From rising debt levels to the pressure of keeping up with social media trends, it's easy to feel overwhelmed. And if you think it's just about how much you earn, think again. Where you live and how you spend can make all the difference. In this video, we're diving deep into the realities of today's financial landscape. We'll uncover why so many people are struggling with debt, how social media might be driving your spending, and what you can do to take control of your money. You'll hear eye-opening statistics, practical tips, and real-life stories that could change the way you think about your finances. So, stick around till the end, because understanding these issues and learning how to manage your money effectively could make all the difference for your financial future. Trust us, you won't want to miss this. Ready to find out how you can turn things around and achieve financial stability? Hit the subscribe button, like and share this video, and let's get started. In recent years, rising prices have made it really tough for Americans to manage their money. It's harder to cover everyday expenses and unexpected emergencies. Right now, 36% of adults have more credit card debt than savings for emergencies. This is the highest level since we started tracking it in 2011. Many families are feeling more at risk because of this. So, what does this mean for your financial future? Let's break down the numbers. 1. 55% of Americans can't handle a $1,000 emergency from their savings. A recent survey showed that only 44% of people are ready for such a surprise expense. Although things are a bit better than during the pandemic, 56% of people would still need to find other ways to deal with unexpected costs. They might use credit cards, borrow from friends or family, or take out a personal loan. Some might try to spend less. Mark Hambrick, an expert at Bankrate, says many Americans are financially at risk. The growing gap between the rich and the poor, along with rising prices, has made things worse. Inflation has especially made it harder to save for emergencies. Almost two-thirds of Americans say they have to save less because of rising prices, but 19% say that higher interest rates have actually made them save more. Another big worry is job security. If they lost their jobs, two-thirds of Americans say they would struggle to cover their living costs for even a month. 42% feel very anxious about this possibility. Despite these challenges, Hambrick is hopeful. The feared recession didn't happen, and a strong job market gives people chances to save, especially with good returns on savings. But many people are worried about retirement. Only 22% of Americans close to retirement feel that they have enough money saved. For many workers, the big concern isn't how they'll enjoy retirement, but whether they can retire at all. What used to be a sure thing is now as uncertain as buying a home or starting a family. A recent Bankrate survey found that nearly one-third of US adults working full-time, part-time, or temporarily unemployed think they need over $1 million to retire comfortably. Yet 45% doubt they'll ever save that much. Over half of the workforce, 56%, needs to catch up on their retirement savings. But even with these tough numbers, remember, saving something is better than saving nothing. Generational differences are clear too. People in Generation X, aged 43 to 58, are the most worried, with 69% feeling behind on their savings. Baby boomers, millennials, and Gen Z also have worries about their finances. Right now, the average American household is $132,529 in debt, even though household net worth is going up, reaching $156.2 trillion by the end of 2023. Debt is also increasing. Personal debt in the US has hit a massive $17.5 trillion. On average, each American adult owes $66,772, and 77% of households carry some form of debt. Most debt comes with regular payments, often with interest. Common types of debt include credit card debt, student loans, auto loans, home equity lines of credit, and mortgages. People of all ages have debt, but the amount can vary. A shocking 8 out of 10 American adults have at least one credit card. Nearly half, or 48%, carry a balance at some point each year, meaning they don't pay off their credit card bill every month. This results in over 100 million people having credit card debt, with an average amount of $6,501 per person. Total credit card debt in the US has reached $1.13 trillion. With an average annual credit card interest rate of 22.63%, credit card companies are set to earn around $256 billion in interest. For many, housing is the biggest monthly expense. Americans with mortgages pay an average monthly payment of $2,006. Mortgage debt makes up 70% of all American debt, totaling $12.25 trillion. There are over 84 million outstanding mortgages in the US, with an average mortgage balance of $145,833. Another big concern is student loans. There are 44 million Americans with student loans. When choosing a college, students often think about the cost and how they'll manage to pay for it. Federal student loans can help cover rising tuition fees, but they also lead to big debt. Whether someone owes $5,000 or $200,000, over 43 million Americans have student loan debt. Why? Because college costs have soared over the past 30 years. Tuition at public four-year colleges has jumped from $4,160 to $10,740, while private non-profit schools have seen costs rise from $19,360 to $38,070 after adjusting for inflation. As education becomes more expensive, more students rely on loans and financial aid. Today, more than half of all graduates leave school with debt. Young adults carry the heaviest load. Those aged 25 to 34 owe around $500 billion in federal student loans, usually between $10,000 and $40,000 each. But student debt isn't just a young person's problem. People aged 35 to 49 owe over $620 billion, with many in this group owing more than $100,000. Even retirees are affected, with 2.4 million borrowers aged 62 and older owing $98 billion. The COVID-19 pandemic has greatly affected student loan payments. Since March of 2020, federal student loan payments have been paused, and this pause continues as of June 2024. Before the pandemic, only 2.7 million borrowers had their federal loans in forbearance. By 2021, that number had soared to 24 million. Unlike federal loans, private student loans didn't get widespread forbearance options. Many people dream of earning enough to live comfortably without stress. But what does that amount look like? According to a survey by SunTrust Bank, 1 in 3 people earning more than $75,000 still live paycheck to paycheck sometimes. Even among those making $100,000, 1 in 4 feel the same way. Although these incomes are well above the poverty line, many people say their struggle to save comes from frequent nights out and entertainment expenses. However, where you live, family size, and healthcare needs can make $75,000 not enough to cover all expenses, let alone save for college, retirement, or emergencies. Another problem is that 10 million American households don't have a bank account. About 4.5% of US households don't have a checking or savings account. During the pandemic, this number dropped as many people opened accounts to receive government stimulus funds. But big differences still exist between those with bank accounts and those without. Historically, access to bank accounts has varied based on income, education, and race. And this is still true today. Households without a bank account often use costly alternative financial services, like check cashing and payday loans, which can add even more financial strain. Why might someone not have a bank account? There are several reasons. Many people say they don't have enough money, face high or unpredictable fees, or don't trust banks. Other reasons include concerns about privacy, not qualifying for an account, banks not offering the services they need, and the inconvenience of bank hours and locations. The federal government is working to help more people access basic bank services. They've introduced toolkits, checklists, and public awareness campaigns to educate people about financial products and how to open an account. Programs like the Federal Deposit Insurance Corporation's Money Smart aim to improve financial knowledge, showing people the benefits of having a bank account and how to find one that fits their needs. Another issue is financial infidelity. Talking about money can be very difficult, no matter where you're from or how much you earn. It's often considered more uncomfortable than discussing very personal topics. Money touches on our pride, ego, and sometimes even our shame. Because of this, some people hide their financial transactions from their partners, a practice known as financial infidelity. Keeping money matters secret can put extra stress on relationships, sometimes leading to their end. Understanding why someone might hide their spending, especially when it becomes a problem, can be complex. So, what causes overspending and hiding it? Social media might play a role. Many people feel pressure to look wealthier than they really are. A recent study found that 28% of young adults admit to posting Instagram photos that make their lives seem richer than they are. This desire to keep up appearances can lead to financial stress or even bankruptcy, driven by the need to maintain a certain image. Spending beyond your means is a big problem. About 61% of Americans are living paycheck to paycheck, affecting both low-wage and high-income households. According to recent research by Lending Club, those with lower incomes, earning less than $50,000 a year, are especially at risk. Nearly 8 in 10 of them can only cover future expenses when their next paycheck arrives. Surprisingly, even among those earning over $100,000 annually, 4 in 10 are in a similar situation. This is risky because it shows a lack of savings for emergencies, leaving households unable to meet upcoming financial needs until their next paycheck. This trend has risen by 2 percentage points over the past year, mainly due to inflation pressures. However, recent data suggests a slight easing from the peak levels seen in mid-2022. Non-essential spending like travel, dining out, and streaming services also strains financial stability for some people living paycheck to paycheck. About 21% say such spending contributes to their financial troubles, with 10% saying it's their main reason for living paycheck to paycheck. But it's important to note that most people in this situation are not spending on luxuries. Their incomes mainly cover essential expenses, quickly using up their earnings. For example, the average rent for a one-bedroom apartment is about $1,510 per month, and monthly food costs average around $690. Adding transportation and healthcare costs, typical monthly expenses total around $3,550 for middle-income earners before taxes. Here's what you can do to improve your financial situation. Create a budget. Track your income and expenses to see where your money goes. This can help you find areas where you can cut back. Build an emergency fund. Aim to save at least 3 to 6 months' worth of expenses to cover unexpected costs. Reduce non-essential spending. Cut back on luxuries like dining out or streaming services if you're struggling financially. Seek financial advice. If you're unsure how to manage your money, consider talking to a financial advisor. Remember, it's never too late to take control of your finances. Even small changes can lead to big improvements. Stay positive and focused on your financial goals. Now that you know all these statistics, are you ready to tackle unexpected financial challenges in today's economy? Share your thoughts and tips in the comments below. And don't forget to like, subscribe, and turn on the notification bell for more helpful videos.